what I would be waiting for at the very moment. On the 1 hour, notice how all of these swing lows were taken out. So this swing low, this higher low, this higher low, all of them have been taken out. The price pushed below there. So now, after gathering up this sell side liquidity and pushing up, spiking above this point and starting to consolidate, I'm looking at this to correct a bit lower before continuing higher, right? So that's where we have the next trend line, or you could look at this as the next point of resistance. Now that I'm looking at it, the 1 hour, I really don't like the formation behind the supply zone. This drop off was mostly efficiently filled, not really seeing a massive spike down. So visualize something like this, right? I'm not seeing this massive bearish spike down that ideally leaves an imbalance behind. So that's why I would only really look at this level as a point of resistance. I wouldn't be looking to sell immediately. If anything, I can see a spike above this point since we have 3 equal highs, technically 4. This actually really catches my eye because there's really about a pip of a difference between all 3 of these points, 1.5 pips. So for sure, this is an area that I believe will be targeted for liquidity. And right above that point, now we actually have a more significant supply zone, which would be up there. So this is something that I like a lot more, right? You have this period of consolidation, right? Orders are gradually being built up. It's a distribution phase. Then you have this massive drop, break of structure, break below these lows, consolidation. This is mostly efficiently filled, but you have this buildup of equal highs. So this area around 0.995 is more significant as far as what I would be looking for the price to target. So 0.992 is one target, 30 pips higher, you have the supply zone here. And let me just see what this would look like as far as Fibonacci go. So this resistance is at the 0.78 level. 0.886 is the supply zone, so a bit of a deeper correction. Let's look at the daily now. So those are the Fibonacci levels that I have marked out to this bearish impulsive wave. Now if we take this one step further, delete that. Let me get rid of these moving averages just for a second. If we connect to September 12th high, extend this to the right. So the only thing I don't like is that we're connecting to the liquidity grab that occurred on September 12th. That usually does mess up Fibonacci levels from what I've seen. And we also have these 2 peaks here. So if we connect to the second peak from September 13th, I think the levels make more sense in my opinion, because this is what we basically get. So if we connect to September 13th's peak down to the lowest low, then notice how the 50% lines up with the 61.8 level from this bearish impulsive move that I connected, right? Because I'm basically connecting these 2 moves as far as the Fibonacci retracement levels go, right? So these 2 moves, I'm trying to see which Fibonacci levels line up together. So in this case, the 50 lines up with the 61.8. And then what's very interesting is the 61.8 from the next one is right above the 78.6, and it's right below the supply zone. So it's pretty much right in the middle of where we have this resistance zone and the supply zone that I discussed earlier. So this resistance in light blue and the supply zone, which would also be the 88.6. Let's recall that, right? So the 61.8 from the larger bearish impulsive wave is right in the middle. And the 70.7 lines up with this peak from the beginning of October. So I definitely like these levels. You could honestly use both of them. So as far as the 1 hour goes, like I said, this would be my target. As far as entries go, because you obviously want to go for an entry, you're either targeting this imbalance here, that's around 0.982 or 0.9818. You're either targeting this imbalance here, which would simply represent a liquidity grab below this 15-minute range. So basically what I drew here, right? Visualize a correction down and a spike below this low at 0.9825. Okay, so spike below this low, a tap into this imbalance, so where you get better orders filled, and then a push back into this range and a push higher. This would be a point of interest that I would have. One of these hidden trend lines cuts through the price action. I suppose this one works better. So 0.98, 0.9818 or 0.982, that's one of my point of interest for entries. I wonder if this lines up with the 38.2. It actually doesn't. That's also if this is the highest high that's created, right? If the price ends up pushing a little bit higher above these highs first and then drops down, then you're basically taking and refining these Fibonacci levels. So yeah, that's something that I would do if this ends up happening first. So this is sort of like predicting the future if it so happens. So basically these levels that I've drawn here, they don't make sense at the moment, but they would only make sense if the current price action pushes higher towards 0.988, rejects that, and then pushes down. Then you would connect to this high. Hopefully, if that makes sense. And then the 38.2 will line up with this imbalance here.